We're making the United States the Bitcoin superpower, the crypto capital of the world, and the undisputed leader in artificial intelligence.
Well, there you have it. Does that make you guys feel better about the markets over the last 6 weeks? Oh, Lord. It's been a little rough sledding, guys. Markets are looking up a little bit today. There's a lot going on. We have the Supreme Court is ruling on whether or not Trump's tariffs are constitutional. So we're going to talk about the potential outcome there, how that could impact markets. We also have the government shutdown potentially coming to an end within the next week. So a big shift there taking place today. We also have a lot going on in the crypto space, but in the deep end space, Daba announced a big partnership with a company that everyone knows. So that's big news. We have Aoki Network talking about robotics in China versus the US, and a lot of good price action today. What's up, Kevin? How you doing, man? So we're going to get through it all. And I do want to start off, though, as people are funneling in here with an AI story that's pretty cool. Let me pull this guy up real quick. So check this out. This was a family that got this $195,000 hospital bill. They plugged it into Claude AI, and it was able to highlight a bunch of billing errors. And it was able to remove $162,000 from their medical bill and getting it down to $33,000. So pretty freaking nuts, man. It said that it's found duplicate charges, regulatory violations, billing misclassifications. So pretty wild stuff there. Of course, this is all in the heels. I don't know if you saw the rumors. I think they were going around yesterday that ChatGPT was going to no longer allow you to get medical or legal advice. Well, that turns out that's not true. It says that the behavior remains unchanged, and there was false claims. That's why you got to be really careful when you see a bunch of headlines on X. Sometimes you got to verify that stuff, guys. It says that social media falsely claimed that new updates to its usage policy would prevent the chatbot from offering legal and medical advice. Their head of health and AI says that the claims are not true. And a little update on our Polymarket odds. What's the best AI model going to be by the end of 2025? Well, we got Google still in the lead here. OpenAI dropping a bit. We have Anthropic climbing the ranks. And I thought this was interesting for a little wild here. Nick from Blockworks. Oh, hold on. Let's get over to his page here. Oh. He was posting about which model is used the most by institutions. Pull him up. By the way, follow Nick if you don't already. He's a pretty sharp guy. Let's see here. Here you go. The flippening, he says. Corporate AI is using Anthropic is taking the lead. How about that? Over OpenAI, Google, OpenAI, of course, now talking about going public, catching some backlash for that. So, damn. There you go. Kevin says, great use case. Yes, indeedy. B13SR out there ruining the surprise, the Daba surprise about the big announcement. It's all good. But we are going to talk about it. I think it's a big deal. Nick is a fellow DY cat. There's some of them out there. Guys, so today, the Supreme Court was meeting about whether or not Trump's tariffs are actually legal. As you all know, I mean, we've seen over the course of the year a lot of fluctuations in markets with tariffs. And we are seeing a big shift here. According to Polymarket, and you see this, I mean, if we look all the way back here, there is 59% chance they'd rule in favor of the tariffs. Now we're seeing that this has dropped all the way down to 27%, meaning that there is a very high likelihood, 73% chance that they're going to rule that they are unconstitutional. If we jump over to Kalshi, we're seeing something very similar over there. 30% chance, so 70% chance they're going to rule against Trump on these tariffs. And it got me thinking, like, oh man, what could the implications here be? if that's the case. And I did a little bit of research on the way that he put these into effect. And I found this article. It is a little bit biased, I will say, but it says that the Constitution assigns Congress, because this is going to have implications not just on the tariffs, but a lot more implications looking forward. Says that the Constitution assigns Congress, not the president, the power to lay and collect duties and to regulate foreign commerce. Trump is trying to bypass these laws and their carefully crafted limitations by declaring a national emergency and invoking this IEEPA law that doesn't even mention tariffs. So he's basically, been claiming national emergencies to be able to put some of these measures in place. So it says here, like, if they do uphold it, it could cement a broad precedent for governing by emergency. Future presidents could claim non-existent emergencies and act unilaterally on a number of issues, from climate policy to technology regulation, etc. He's already declared 9 of these national emergencies this year, outpacing by far any other president to this point. Says not only would the president be able to act without congressional authorization in many instances, they would be able to circumvent laws that would otherwise prohibit their actions. It would dramatically upset the balance of power between the president and Congress in almost every area in which Congress legislates. So that's what's been, they've been talking about today. And it looks, and I listened in for a while, it does sound more and more like they're going to rule against him on this. And I got to thinking, okay, what kind of impact could this have on markets? Well, we have this, post here talking about how it's much bigger than people realize. The U.S. Treasury would face a massive refund liability here. So they're saying the liability could be up to $1 trillion to importers. I don't know how they arrived at this figure, because we've had over $100 billion in imports collected. Maybe there'd be some sort of fines that have to be paid. But it says that if the Supreme Court rules against the tariffs, the payments are considered wrongly collected taxes. These tariffs would have been applied to 150 plus countries and nearly every product. It would reshape the global economy. This person down here said $1 trillion refund. Traders are saying this is quantitative easing from a judicial standpoint. So this would push a lot of money back into the economy potentially. I actually went on here and figured, hey, you know what? I'm going to ask the AI. What do they say about it? It says here, crypto in particular would likely trigger a bullish risk-on rally in cryptocurrency markets. It says the reasons behind this, and I think it does make sense. I mean, you think about from the time that we saw the tariffs announced earlier this year, we've really seen things risk off. Yeah, Bitcoin's had its run. We've had a couple large caps run, but the small caps have not really had much risk appetite. And we've seen this even in the stock market, where 44% of the market caps are really in the top 10 of all money in the stock market. So we've seen a very much underperformance by the more risk-on investment. But it's here, it says reduces inflation and Fed policy tailwinds. So, there's a lot of talk. Okay, the tariffs cause inflation. We haven't really seen it come to fruition in a big way to this point. Not to say it couldn't happen, but this is something they're saying that, hey, if the tariffs are, are deemed unconstitutional, the Fed then would be able to look and say, okay, well, we don't have that concern anymore that inflation is going to come from the tariffs at this point. So that would allow them to maybe get more aggressive with rate cuts. It does say that it could help with the DXY, so the strength of the dollar could decrease a little bit. As an importing country, we've always seen the dollar has been very strong against other currencies. That allows us to have more buying power. That generally, if we see the DXY drop, that would mean that we could be more risk on. You also see that says broader risk on spillover. This is what we were just kind of talking about. You'd see a bunch of this money circulate into the economy. So it'd almost be like quantitative easing to an extent. Now, there are some contrarian views here, like always, right? People are saying that, hey, this actually could be a short-term crash. I mean, we don't know because of policy chaos. We don't know how Trump would react to this, guys. Like, I have a hard time believing he's going to be like, oh, okay, well, we'll get rid of the tariffs and just go on about his business. he could go scorched earth, So this could go a lot of different ways. But overall, I think the markets generally would react pretty well. That said, I mean, we could be going through this all over again next year if he then goes through and tries to get congressional approval. I have a hard time believing he's just going to be like, yeah, we're not going to do tariffs now. Okay, so this does have a lot of implications. Now, as far as the December rate cut, how that maybe changes things. The big thing that the people that were against a rate cut in December are touting is, hey, well, we can't cut rates because inflation from tariffs. Okay, so if the tariffs are gone, they can't say that anymore. So I don't know what they would do from there. You said sorry. No, you're good, bro. I'm gonna reshare because I lost my audio here. So I think from that standpoint, they can't talk about inflation, so that'd be good for rate cuts, making a case for that. You had several of the Fed governors that are like, hey, we don't want a December rate cut. The other side of things, though, is the job market. So, we've seen the job market weakening. Today, we had some numbers come in. Let me pull this up for you guys. And they were actually better than what was expected, which is kind of surprising, actually. I was surprised, at least. It says that payroll growth at private companies turned slightly stronger than expected. This is from October numbers. And there's some hope that the labor market isn't in danger of sinking. Companies added 42,000 jobs for the month, following a decline of 29,000 in September, topping the Dow Jones consensus. They estimated we'd have 42,000. So that's a big beat there. And the revision for September showed that there were actually 3,000 less jobs lost. So that is actually a positive revision for September as well. So pretty surprising, in my opinion. There is some extra context here, though. It says that all the job creation was from larger companies employing at least 250 workers. The smaller businesses lost. Okay. And it says that while big companies make headlines, small companies drive hiring. So to see weakness at the small company level is definitely still a very much a concern. So this is kind of interesting because on one end, if you have inflation's, concerns dropping off, that does make it easier for the Fed to cut rates. But if the job market's not weakening as much as they had thought, they might not be in a rush to cut rates because that's the balance, right? This might give them the ability to just stand put and not do anything in December. And I think, Trump made it very apparent what his thoughts are about Jerome Powell today in his speech. And then we'll talk about what Polymarket's saying.
Prices are down, interest rates are down, despite the fact that we have a total nincompoop at the Federal Reserve.
So he went on today. He's had a lot of different insults thrown at Jerome Powell. Now he's a nincompoop. So we got that. Let's see here. So the likelihood of a rate cut has been dropping pretty quickly. It was, 90%. Of course, then we had Jerome Powell say, well, there's no guarantee of a December rate cut. Far from it. And now we have these additional reports coming in. Now a 65% chance. Okay, so this is something to keep an eye on. On one end, the market is only baking in 65%. So if we do see a rate cut, that means that there's some upside for sure. Back when it was 90%, it was already pretty much a guaranteed baked in the markets. But also there's downside risk here. If we don't have a rate cut and the market has expecting a 65% chance, that would certainly likely cause a sell-off. Okay, so we have to keep an eye on the reports coming out. One of the things that will improve those reports would be if the government is back up and running again, because we have not had all of the reports, all the statistics from the Bureau of Labor Statistics that we normally have. And some big news there is that the Democrats, following the elections last night, are requesting a meeting. Says that we write to demand a bipartisan meeting of legislative leaders to end the GOP shutdown of the federal government and decisively address the Republican healthcare crisis. Democrats stand ready to meet face-to-face anytime and any place. It says roughly a dozen Senate Democrats are viewed as ready to end the shutdown and turn the party's focus towards hammering Republicans over health care ahead of a vote to extend expiring Affordable Care Act subsidies following the reopening of the government. So it sounds to me, or it sounds like this in this report, we could see the government back up and running again sooner than we had anticipated. We are, as of today, by the way, it's the longest shutdown in history. So we just surpassed the length of the last government shutdown under when Trump was president as well, was the longest. This is now the longest shutdown. And, you know, you look at what we're seeing. Where are we at here? Oh, we're over here. As far as Polymarket goes, we are seeing a shift, guys. You know, this continues to move too. So this would be within the next 3 to 6 days, I think. My math is correct. So this has seen an 8% increase. So there is a lot of optimism that we could see the government shutdown end within the next week. And that would be going on a lot of different levels. Obviously, we've seen a huge liquidity crisis in our banking system, a lot of that dealing with the government shutdown. This is money that the Fed has had to lend to the banks because of the liquidity constraints that they're seeing right now. That I think has been hitting markets. In fact, Jerome Powell and Trump came out today and said that the government shutdown is starting to have an impact on the stock market and obviously on crypto as well as liquidity. There's been a liquidity crunch. So that'd be a big deal, guys, if that does get solved. Now, one of the things that I thought was a little telling here, looking at the 2 and the 10-year Treasury, we've seen it tick up today. So to me, that would mean if you zoom out here, we'd seen, you know, really over the last month, we'd seen things coming down ever since the Fed meeting. Now that I think the market's baking in less of a chance of a December cut, we're seeing things tick back up a bit. And I think the news today, this kind of gives us an insight into what the markets are expecting. Now, if we do get an official ruling on the tariffs that go against Trump, I'll be very curious to see what happens with these rates and how the market's reacting to that. And we're seeing the same thing with the 10-year moving up as well. So that'll be something to keep an eye on for sure. But, you know, a little optimism here, guys. I think we're right at the point before optimism. You're seeing so many different people out there, bears, bulls. The bears were like yesterday, they're out, man. They're like running laps, victory laps all over the place. Like the bulls are so dumb, blah, 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 blah. I haven't seen them out too much today. It's funny how that works. It says, but who's left to be optimistic? October killed so many portfolios. Indeed. A lot of people got liquidated. Early November killed even more. Yes. Yesterday was probably the most negative I've ever seen my crypto Twitter timeline. But he said, I think the rest of November and December will rip faces. And what are your thoughts? And of course, they throw out this freaking chart. Guys, I don't know, I don't even know if this chart even matters anymore. I mean, we've seen such a decoupling between like what Bitcoin and Ethereum's doing versus small alts. And I think a lot of that is because it's been institutional versus retail. To me, when I look at this chart, I'm like, okay, I can see Bitcoin being up here. We've seen all-time highs. We've seen quite a run. I think altcoins are like literally around depression. I mean, you think about back in December, we saw the big drop off in January, and it's just been this bleed. We saw a very small recovery, a little bit, of course, in the course of the summer, saw a drop, saw a bounce in like September, and then just like disgusting price action to bear market lows. And that to me is like we're starting to come out of that maybe, which would be good. That would mean that there's a lot of upside looking forward. But again, I don't know if this chart even freaking matters at this point. But maybe this matters more than anything, I would say. And that is that Jim Cramer said that we're in a bear market. So if there's any reason to be optimistic, I think it is that, okay? Because the Jim Cramer effect is very real, guys. That to me makes me more optimistic than anything. But if we look at the fear and greed index, yesterday was ugly, guys. I mean, it's amazing. I tweeted about this earlier. Sentiment shifts very, very quickly. Just last month, we were in greed. Bitcoin was at all-time highs. We had Solana pumping up to $250. We had all the digital asset treasuries coming. Everyone's like, man, we're going to have the spot ETFs approved. And then it was like, no, government shutdown, no spot ETF approvals. We're going to be pushing that out. Then Trump's like, 100% tariffs on China, and everybody just like lost their minds. Binance like failed, and everyone got liquidated. And then here we are. Okay. 23, extreme fear. I imagine when this updates in 2.5 hours, it's going to be improved given what we've seen today. But, just as quickly as it turns this direction, it can turn the other direction. Okay. And I think it's important to keep that in mind. Now, you also have the fact that Trump earlier, just about an hour ago, had this to say about crypto. Pull this up.
Vicious on crypto. They were for 3 years to embrace a vital industry here in Miami. I've also signed historic executive orders to end the federal government's war on crypto. Crypto is under siege. It's not under siege anymore.
Boom. So he was talking about that. Oh, he also went on. All right. Sorry.
Because it's a big industry. It's a big industry, and I have a lot of people that are great people, great business people. They're in other businesses, but they're in crypto too. And it takes a lot of the pressure off the dollar. It does a lot of good things, but
that's the key part right there. It takes a lot of pressure off the dollar. Well, what have we seen? This is a wild chart. I actually haven't pulled this up before, but this is the stablecoin chart. Look at the growth we've seen this year, going back to May. And remember, the stablecoin bill got passed in like June. We have seen the stablecoin market cap just fly upward. Now, this is big on for a number of reasons. Number one, it's a lot more money coming on chain. But I think in particular, if we zoom in on what we're seeing here, let's go to the 1 hour chart here. Load trading view. We are seeing that as this loads, if it does load, my computer's being a little slow today. We are seeing that the stablecoins look to be getting deployed here. In particular, like look at what we're seeing right now. So this thing peaked up. I think, and if you look at your timeline, I'm seeing more and more of this where people are like, I'm still 50% in stables. I'm 70% in stables. People are a little bit cautious right now. They're a little worried. Could the charts continue to break down? And I will say, I don't think we're out of the woods yet by any means, but you see it wicked up to here. A lot of people cashing out, and then deploying. And now you're seeing the stable coins come down. This is money being deployed into the market, but we're still sitting at, I mean, look at this, guys. This is, this is the total crypto market cap. Lost my stablecoin market cap. Here we go. So you saw this buildup of stablecoins to 314 billion, and then we have started to see them get deployed to an extent, right? So I think that's good. That's money on the sidelines right now. $315 billion that can enter into the markets. And I think when we get to the point where the risk reward is getting better and better, I think we will see a point where, is this inverted? Yeah, that was inverted. Sorry, guys. So here you go. So we've seen the stable coin balance is like, that does not look right. This looks a lot more right. Okay. So look at the stablecoin balance that's just been growing. Now we are just starting to see this stuff get deployed. So this to me this is the big deal right here. Just like really over the last week or so, we're starting to see stablecoins come down. That means that that's getting deployed. So there's a long way to go. $315 billion. That is still correct. That is a lot of money on the sidelines. You look at money market funds, we got like $7 trillion sitting there. So there's a lot of money that can get deployed into crypto. And I think if we get to more of a risk on, once that happens, and you see money start to flow into risk on assets, now you have the spot ETFs. Okay. You've got digital asset treasuries. You've got a lot of ways for that money, that $7 trillion in money markets to come in. You already have all this money on chain. It's just kind of sitting there. And I've seen a lot of these people, a lot of these traders are like, hey, I am like 20% allocated to the market right now. I'm waiting to see what happens. I'm waiting for the market to show some strength. Because right now, like, we are in a weird spot, y'all. Like, the bulls have not really taken control. We're seeing a good bounce today, but I still think we have a long way to go. Now, this is what the Bitwise CEO had to say about the market right now, and I tend to agree with his take here.
Crypto retail is in max desperation. We've seen leverage blowouts. We've seen issues with vaults. We've seen issues with yield protocols. And the market for sort of crypto native retail is just more depressed than I've ever seen it. I think that market is close to a bottom. It's hard to find a crypto native investor who still has much enthusiasm for the market. I think the market is shifting into an institutionally driven market. And interestingly, that market is still bullish. When I go out and speak to institutions or financial advisors, they're still excited to allocate to an asset class that, if you pan back and look over the course of a year, is still delivering very strong returns. So my view of the market is we have to get through this retail flush out. We have to hit bottom from a sentiment perspective. I think we're very close to that. Mm-hmm. And then I'm optimistic that we rally into the end of the year and into 2026 as the institutional investors who are more maybe even keeled about what's going on at a fundamental level in crypto start to drive the market forward. So I'm optimistic, but we do have to finish this washout of retail sentiment. And again, I think we're closer to the end of that.
I would agree. I think looking at how pessimistic everyone is, I absolutely think that we are getting very close, very, very close to the end of the washout. Now, we'll talk about what that means for DePIN as far as institutional money flows go. But looking at Bitcoin, again, this is inverted. Flip this around. We are at 103,500, and this is, I think, really important because I know a lot of people today looking at charts and they're bullish. Okay, but this is something that I think is important to do to remove bias. If you invert the chart, like, this looks very bullish to me. When you flip it, and it kind of removes a little bit of bias, I still am like a little concerned here, guys. Like, I think, yeah, we saw a bounce today. I don't think we're anywhere near out of the woods. It's great to see us holding, and we did drop down to 98,000. It was nice to see that bounce. But I still think, like, there's still a lot of uncertainty in markets. We don't know what's going to happen in this tariff situation. The government shutdown still looming. We had a lot of washouts. I think some big players got washed out behind the scenes in crypto. We had Balancer get hacked. That's been flying under the radar. No one's even talking about that. So there's a lot of negative news I think we still need to get through. But I do still remain bullish through the end of this year into next year once we get all this behind us, okay? But I wouldn't be surprised if we still see a little bit more of a washout before things really, truly turn around. Quantitative tightening is ending for sure on December 1st. Doesn't mean that's quantitative easing. And in fact, when we've seen QT ending in the past, it has led to a drop in markets for the week or two following that before things turn around. So I think we have to be cautiously optimistic right now is my main thing. And I'm still holding all my spot positions on DePIN, but I'm not like entering and sizing anything right now. Any new positions. I'm kind of waiting to see how this all plays out at this point. Benjamin Cohen, he's a pretty good TA guy. He's talking about the Bitcoin strength needs to continue increasing before we see alt season. So he's talking about he needs to see Bitcoin continue to gain strength, recapture the bullish sentiment. And if you look at Bitcoin dominance, we're at 60%. I mean, he's talking about, hey, we need to get to like 65, 70% before we can really see a big shift to altcoins. I don't know. I mean, he's been pretty spot on throughout this market cycle, guys. Like, yeah, he's missed some things, but he's been pretty good. So again, I'm being cautiously optimistic, but it doesn't mean if Bitcoin runs, doesn't mean that alts can't run too. It just means that, he expects that Bitcoin is going to outperform alts for a period of time before we see the flippening happen and alts really start to run. Ethereum got pretty low last night. It got to like 3,200, I believe. Still same thing here. Like I'm not super optimistic at this point in time that we have just like had this huge turnaround. The bulls are out for sure today. I remain bullish on a more intermediate time frame, but I still am like, maybe it's because of all the back and forth over the last like month and a half, but until we see a big break the other direction, I just don't see it. Solana's all the way down to 161. Guys, it got down yesterday to freaking $148. Like that's insane. We were at a $250 like a month ago. So Solana got absolutely crushed. Now, I will say the positive here, I mean, we are trending back in the right direction, but the big positive to me is that the Solana ETF flows, whereas we've seen Bitcoin and Ethereum very negative, we are seeing positive inflows on the Solana ETFs, even through all of these sell-offs. So the institutional interest for Solana is there. So once things do turn around and we start to get momentum in the other direction, I think this is a huge sign of strength right now that there is positive inflows into this ETF, regardless of everything that's happening, all the noise in the markets right now. So I love to see that. Sistine Research had a pretty good call today. I wanted to bring up this. He's been pretty spot on. He missed a lot early in the year. He was still very bullish going into Q1, like most of us. In fact, I only know of one person that was like really shorting the market hard. I'm going to talk about him in a minute. But Sistine has had some good calls. And one in particular he's calling out is Nano as a good point to accumulate on this play. It was at 79 cents when he was really calling this out earlier today. It did get up over $1. It is kind of like a beta play to an extent to what we've seen with Zcash. So I don't know. I didn't add anything to it. I was thinking about it. I still might. But right now I kind of want to just stay on the sidelines. I want to hold my spot positions I'm in and kind of see how this plays out over the next week or two, without necessarily deploying anything. Cause I just think we're in like a sketchy spot still. But it has been doing pretty well. And he seems very bullish on this play for sure. What are we at? 92 cents right now. So this thing was at 79 cents. So it is moving, and it did pump pretty hard. And you look at the market cap, it's 123 million. So it's not like a super high market cap. Right now, Zcash is like $8 billion. So I thought his take here was interesting. And it's something that, earlier in the year, I don't think he would have been this tentative, but I think everyone right now is being very cautious and rightfully so, given what we've seen. But he said, I've been on a Twitter rampage the last 48 hours. He hasn't been super active for a while now. But he did say there's some charts that have amazing risk reward here. XRP, there's some big news out of XRP coming. Virtual has been on its hair. XNO. He said, think crypto in general has great risk reward here, assuming Bitcoin holds 100K. And that is the key thing right there. If we see Bitcoin break down further, then all bets are off. Then I think we really need to just like kind of hold on. That said, manage risk appropriately. So I personally have high conviction and upside from here in those names that I hold, and he holds all three of them. He said crypto has been absolutely brutal all year. There's no doubt about it. And there is a chance that it rugs us yet again. Never full port, always manage risk. Recommend using leverage he said recommend against using leverage because of the thin order books and high volatility. And he still says that 93K is a distinct possibility for Bitcoin. So we'll see. I mean, generally, November has been very positive, and December has been very positive. But, I think everyone right now is being very, very cautious about things. Now, one thing that has been absolutely freaking ripping is Zcash, guys. Zcash. Yeah. Tell Zcash that, Joe. Look at this thing, man. Look what this thing's done since September. It's at $50. It's done almost a 10x. It's in at just under $8 billion market cap. I think Joe wants to go down the tubes because he doesn't have any exposure right now to the market. You're seeing a lot of that. The bears that are super excited right now, a lot of them moved into cash, and I think they're rooting against the market. The people that have some exposure, I mean, they're kind of like, we'll see what happens. And then I think the people that are like fully in right now and don't have any capital sideline, they're like really pushing the bullish sentiment. It's kind of funny. Everyone has you sold the top. Okay. So you sold on December 10th of last year. Is that right? So that would have been the top. But this guy right here called Zcash. So I will say I did actually join his group. This guy, after evaluating everybody out there, like he shorted heavily the Trump pump. All right, Joe, show us proof of all your sales on December 10th or December 12th, and I'll believe you. I want to see proof of that. You sold the exact top. I'm calling bullshit. But Brandon, he shorted the market heavily on the Trump pump. After the Trump pump, this guy's made close to $100 million this year. He also called Aster, got out right when it was topping. He called Zcash. He called Plasma. He called Virtuals recently. The guy's had just phenomenal call after phenomenal call, and he has been on top of everything. So even though this year has been a little rough, very rough, honestly, if you're just holding spot, there have been pockets that have run at different times. There's been times that you could really short the market, and he's been on top of it. So, I am in his community now, so I'll be able to, better look at the overall sentiment of markets when we're seeing inflection points, and be able to kind of move that into my thesis as well. So I'm excited about that. And the guy is sharp. I mean, he's been the best of anyone really in all of crypto this year. It's not even close at all. And a lot of times he's been against the grain of the overall, sentiment in the markets, but he's been right, man. Dude's really smart. His TA is great, but he doesn't just do TA. He's able to connect TA with different inflection points based on macro events that have taken place. And I think that takes a very unique skill set to be able to cover it all and bring it all together, All right, let's talk about some deep in stuff, guys. We are seeing things move back up again. Helium has been rebounding quite nicely today. If we look at their DC burns, they're burning almost $60,000 a day right now. And I think this is cool. You can see at what price does it need to stay below to be net deflationary. Once we get above 247, it'll no longer be net deflationary. We'll still see the token burns and the revenue in the open market buys. This would mean that once you get to this price point, let's say that HNT was at 247, the amount of burns taking place would match the emissions that are going out. So the supply would remain the same. Anything below this $2.47 on HNT would mean that the supply is actually decreasing. As we get above that threshold, that would mean that the burns would no longer be offsetting all of the new emissions. Okay. Now, as this moves, as more revenue is generated, obviously that threshold changes. But the main thing, though, is really the DC burns, which currently we're seeing about $400,000 a week in burns, and subsequently we see the market buys taking place. This has been really big for the price of helium, y'all. Like, we're seeing it bounce back today, sitting at up 14%. Obviously, you saw a sell-off yesterday, but going back to where they announced this at $1.80, we are up substantially. And a lot of other projects across the space were showing very much weakness. I would venture to guess that we would not be anywhere near 235 if they weren't doing open market buys. When you have somebody stepping in that are making daily purchases now from revenue, that makes a big freaking difference in the market. So I'm excited about where helium's going. They're continuing to expand. They're continuing to generate more and more revenue. And I also think, once the market does flip the other direction, we get some more risk on appetite in the markets. You add some of that buying pressure there. I think we could see things look nicely looking forward. But again, we don't know what's coming. And it will be nice, though, to have buyers, even in a bear market. I think that's actually what's going to, separate DePIN, in particular projects that are doing open market buys, from all the other projects in the space. Silencio actually had some news today. It says that while markets continue to be turbulent, Silencio closes third contract in 1 month for their voice AI data, meeting with a tier 1 AI company tomorrow. So they say currently they have more demand than supply by a factor of 10x. So if that's true, that's a big deal. But that is a big announcement, guys. They found product market fit. So how about that? I think that's a big reason why we saw this price action today, up 11.5%. Obviously, there's a big buy order here. I would imagine the timing of that is probably very close to the announcement on X. Someone saw that and probably went and bought. But big deal nonetheless. Daba, our favorite project that Joe loves. They partnered with Domino's in India. So they are installing internet across the different Domino's locations across India. So that's good. That's a pretty big deal. I mean, for a number of reasons, though, guys. Like this is a pretty big announcement. For one, it gives them validity. If they're going and talking to people about signing up for their internet service, and they can say Domino's has internet through us, that's a big freaking deal. But Joe is such a hater. All 4 Domino's in India. Yeah, I'm sure. There's 4 Domino's for their 1.4 billion people. But still, nonetheless, man, that's a name everyone recognizes. So I think that's a big deal. You know, and Karam was talking about in our space earlier. He's like, yeah, look, we talked about the internet service, super excited. And then once the crypto stuff got involved, they're like weary at first, but now they're actually excited about it. So we are starting to see a shift for sure. And when you look at the amount of hotspots they've sold, 21,322, they added another local cable operator this week. Over 19,000 are installed at this point. So again, keep in mind these are getting installed at places where they're getting usage. So that's a pretty big deal, man. They are moving things along for sure. So love to see it. We've seen a huge increase in the amount of installs over the last few months. Joe does not have any exposure to this project, so he wants to hate 2,100 as of 2024. So Joe fudged bags that he doesn't have. if he was allocated to the market, he'd have a different tone. 375 AI today announced a partnership with Wingbits and Beacon Protocol. So Beacon Protocol, I believe, is going to be using the data to train AI models. But Wingbits, it makes sense because they have 375 AI has all these billboard locations. They're going to have internet access out there. Why not hook up Wingbit stations and some of these other DPIN protocols, that need to be deployed? Why not double down and put them in the same areas that you have your 375 AI? So that's a solid partnership announcement. I love what 375 AI is doing. This is Beacon Protocol here. So you can see they are decentralized private data layer for smarter AI, unlocking private data sources for AI and ensuring everyone gets paid. You have the token, guys, sitting at just over 3 cents. Woo! DPIN stacking, yes. I think for them, there's a lot of DPIN projects that it would make sense for them to partner with 375 AI. Why wouldn't you? If you've got billboards in high traffic areas that have internet access and plenty of real estate to install these different sensors, why wouldn't you do it? But the token price sitting at just over 3 cents, $6.44 million market cap. Oh man. I just think about in the future when market conditions do improve, what this price is going to look like. It's going to be exciting to come back and look at this. But keep in mind the early investors. I know I brought this up before, but they're early investors that invested millions. They have $10 million of investment rounds bought in at 5.5 cents, and they're locked up for 3 years after the 1 year cliff. So 4 years from now, before they're fully vested, and you can get in at 3 cents right now. It's actually insane. GeoNet was highlighted in Masari's report. If we look at their Q3 2025 revenue, Adrian, good question. I actually pinged Mark, their CMO, yesterday, and he said this for Exbits, by the way, guys. He said that he can't share the info right now, but that they have a lot of big news breaking over the next 2 weeks. So pay attention to their account. There should be some big announcements. I know when I spoke to him before, he said Q4 was the expected TGE. So sounds like they're going to have some big announcements coming out of their main account here in the next week or two. So I'll certainly be keeping an eye on that. But that should be coming. GeoNet. So you look at their revenue grew 216, almost 270% year over year to over 1.2 million and an annualized revenue of 5 million. You have 80% goes to burns. So 6 million GOD tokens were burned in Q3 alone. That's a 59% quarter over quarter increase. That's actually crazy. That's a huge increase quarter over quarter. Total value of nearly $1 million. Their GIP7 passed, so they're moving over to Solana. So hopefully you got your tokens migrated over there. And there's more in the reports. If you pull up Polygon Scan, and obviously they're going to be making Solana their main chain, but you can see here they have now burned 25 million tokens, or 2.5% of their total supplies out of the supply forever, burned out of supply forever. So, whatever their fully diluted valuation is, decrease that by 2.5%. That'll continue to happen, especially the lower these prices are right now. That is the one silver lining to the market being beat down, is that it burns a lot more tokens out of their supply. As revenue comes through the door, the lower the token price is, the more tokens get burned. As the price appreciates, you'll see less and less burns, of course. But they are doing open market buys too, guys, by the way. They're still on the Polygon side of things. They're doing like 50-50 as of right now. They're doing it through Gate.io, but they're doing it on chain on the Solana side through DEXs. Actually, Decrypto Way found that transaction. I should have pulled that up here, but we have found the wallet that's doing the buys and burns on the Solana side of things. And GeoNet price, you're seeing, we saw a big spike up today. But sitting around 12.6 cents, $55 million market cap. Hey, yo. Nice to see a little bounce back there, but still criminally undervalued in my opinion. I think we'll see this thing bounce back again when market conditions are better. We had Aoki. So Nils came on, this was earlier this morning, and he talked about the difference between the US and China when it comes to robotics. There was an open source robot manufacturer in the US that is closing their doors. They are actually going to make all their info public so someone can pick it up and try to take it on. But what we're seeing is a big shift here. In China, they're doing open source, so you can create software. Nils said in this video that he expects that there will be, by the end of next year, probably over 100 different humanoid robot manufacturers shipping product in China by the end of 2026. And it's open source, so their software is going to be able to work with all those different robotics companies. The US is kind of gating their robots. So they have really 3 main manufacturers in the US. They're going to have it all closed source. So it's going to be very centralized. Kind of sucks, man. And they're going to be collecting data too. Like, that's something people need to realize. Your Tesla robot, or if you're going through Figure, whatever, you got a robot walking around your house, they're going to be collecting data of your personal space. And these companies are going to be trying to freaking monetize that data. Like, that's a little fucking weird, man. I don't know how I feel about that. Don't know how I feel about that exactly. But Aoki, guys, they're crushing it. I mean, they're based over in Hong Kong. And they're working with the Chinese robot manufacturers, which are way, way ahead of the US anyway. The market over there for robotics is massive compared to the US. Watching you do all sorts of things. Well, I assume that's Will behind the Wolf Crypto account. We don't know. We don't know what Will will be doing over there. But Aoki having a day. It got crushed yesterday when the market sold off, but up 30% today. That's why it's good to DCA. If you find a high conviction play, you just never know what could happen. We saw the big sell off yesterday. We could still see another sell off, guys. Like, I'll say it. We are not out of the woods yet. It's great to see things bounce back today, but after you see a sell off like that, it's not unheard of to see a dead cat bounce. So we need more positive price action. We need to reclaim some levels to be back in a bullish sentiment. At this point, we're kind of in no man's zone. And I think we need to be a little bit cautious. But, looking further into the end of the year, I think there's plenty of reasons that you can find optimism. This last 6 weeks has been brutal with the washouts, but a lot of black swan events. And next year that they're going to be cutting rates drastically. They're going to be starting quantitative easing well before that. So liquidity cycle certainly will be there, coming out of quantitative tightening that we've been in for now multiple years. So that'll be exciting to see. That was Will behind there. Maybe, man, your robot's going to be like, I quit. I don't want to live with him anymore. Oh, man. Hopefully everyone's having a fantastic day. It is Wednesday hump day. This is, gosh, what episode is this, guys? We've been live streaming for a while now. Episode 93. How about that? I won't be on tomorrow. I'll be on Friday. And we'll have plenty to talk about, I'm sure. But guys, stay safe out there. Manage your risk. Be cautiously optimistic. We'll keep doing the research. We'll keep looking at the fundamentals. DPEN will turn around once risk appetite comes back. It's been ugly, but there's plenty of reason to be optimistic, guys. And after all, we are all alive. There is that. Go outside, touch some grass. I will see you on Friday. Peace.